Welcome to the Fintech Times News and Views podcast. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times. Hello, and welcome back to the Fintech Times News and Views podcast brought to you by Vanta. Vanta helps you save time, money, and build customer trust, all by centralizing program requirements and evidence collections for frameworks like Dora. If you want to manage risk and prove security, then head to vanta.com/fintechtimes to learn more. Anyway, guys, we're back for another week to talk about fintech. How are you doing this week? How's it going?
It's all going good. It's been I want to say quite a busy week. We've had a lot to get through, but they're always the interesting ones as well. It's when it's busy you get your more interesting news coming in. There's a lot going on, a lot to pick from. So yeah, it's been good, and I think that also means we've got some very good, interesting stories to talk about today.
Awesome, I love that positivity. Francis, how about you?
Yeah, it's been good, really. Just to say the same thing, it's been quite busy, especially at the start of the week. I feel like it might have slowed down towards the end, but yeah, no, we've got a lot of good topics to talk about today and looking forward to the conversation.
Amazing stuff. So speaking of those good topics, what are you guys going to be talking about this week? Tom?
So I'm going to be combining this trio's two favorite things, and that's cybersecurity and financial regulation, and looking into a new report about both of those.
I do love me some cybersecurity and regulation, I must say.
I know.
Francis, how about you? What are you going to be talking about this week?
That is truly sensational. But the article I want to talk about today comes from the global payments orchestrator, as it rolls out MasterCard payment passkey in Latin America to combat fraud and streamline checkouts.
Awesome stuff. And then I'm going to be talking about Project Nemo, and they're taking on the Banking Accessibility Challenge. But I mean, I don't know about you, Francis, but I physically cannot handle the anticipation of Tom's just mind-blowing articles. So I think
the suspense is quite literally killing me. Yeah,
you're going to have to take it away.
Absolutely, with more pleasure than normal this week. And that's because there's this new report that has revealed that over half of large UK financial services firms, around 58%, have fallen victim to at least one third-party supply chain attack in the last year, and that's according to new research from Orange Cyber Defense, which is Orange's European cybersecurity business unit. Now, as you guys know, supply chain attacks are a huge challenge for organizations, and have been for years. And this new report says that 23% of UK financial services firms were targeted by these attacks, 3 times or more in 2024. In a survey of 200 UK senior security decision makers, Orange found that most financial service providers must reevaluate how they assess third-party risk. Now, despite this obviously huge challenge of these supply chain attacks, almost half, around 44% of financial institutions only perform third-party risk, or only assess, third-party risk during the initial supplier onboarding stage, while 41%, which is the majority of the remainder companies, perform periodic risk assessments, while only 14% of these organizations follow what Orange calls the gold standard of continually assessing risk and using dedicated third-party risk management tools. Now, these varying approaches to digital resilience appear to have, as you'd expect, have significantly different impacts on the amount of attacks they suffer. So in 2024, 68% of those who only assess risk during the onboarding phase suffered a supply chain attack, dropping to 57% for those who periodically assessed it, and only 32% who continually assessed and employed risk management strategies. So clearly from this report, it's pretty obvious that the more frequently these financial firms assess risk, the less frequently they suffer supply chain attacks. And yet, even with this, what you'd expect to be seemingly obvious findings, it's clear that a significant number of firms are just going to fail to employ more robust risk assessment practices in the future. And this report comes as, following the last few years when the European Union has introduced a whole load of cybersecurity regulations, including the Cyber Resilience Act, the EU AI Act, the Network and Information Systems Directive 2, and most recently, the Digital Operations Resilience Act, or DORA. Now, in light of these, obviously, these are huge regulations that are coming out across the EU, trying to really pose a big challenge to those that are carrying out these attacks and make firms a lot safer. And in light of these, 74% of UK cybersecurity professionals in financial services say that the EU's security posture and policies rank better than many other economic regions, while 92% of respondents to the survey want the UK to adopt a countrywide regulation similar to DORA to ensure digital resilience in the financial sector. And obviously, this comes as, following Brexit, the whole point is we want to have our own rules. We want to be able to be really flexible and sort of be ahead of the likes of the EU because we'd be more agile, because we're governing our own policies. We'll be able to get these things out quicker. And yet what is emerging is the fact that the EU is kind of rolling out all these different rules and regulations and initiatives to keep organizations safer. And the UK especially is lagging behind. And I just wanted to get your guys' take really on what you think this will mean for the UK long term. Do you think this is going to mean that the UK just becomes a less attractive place to do business? Is it just a case of we need more regulations? Or as this report says, is it just down to the organizations to actually just do more due diligence and be more prepared themselves? What side of the spectrum are you falling on? Or is it kind of a combination of all of these? Francis, I'll come to you first. What do you think?
I feel like there definitely is some sort of element which suggests it's a bit of everything, but especially with regulations like DORA, where the consequences of not complying and having your third party providers also not comply, and as I say, the consequences of it, it's millions and millions that's at stake. And I feel like when there is such a big penalty for not complying, not only do you then suffer the consequences of the cyber attack necessarily, but then you also have to pay the regulators essentially. And I'm sure no organization willingly wants to do that. So I think from the point of view that organizations can't take this approach of, oh, well, we did an initial check and it's all good, therefore from now on, it's not our responsibility what happened. They must constantly be going through and double checking and triple checking that anyone that they work with is compliant and is ensuring that they've got the best cybersecurity measures in place to prevent attacks, and not only prevent sort of potential data breaches, but preventing having to pay these huge fines that are being implemented by the regulators. So ultimately, I think it's on organizations to do more for a variety of incentives. And I do think that the more consequences we see from regulations like DORA are the things that are really going to sort of catalyze and accelerate organizations' desires and efforts to really keep their third parties partners in check.
Yeah, I agree. And I think just the fact that I think most of these organizations are aware that the less times they're assessing risk, the more times they're going to suffer these attacks. So if that's not enough of a driver, then as you say, these fines from regulators probably is going to be the way to go, to us. It seems like the only way to really enact change is through regulation. But Polly, what do you think? Do you agree with that, or have you got a different stance?
Yeah, I mean, I don't really have too much to add from what you guys have already said. I think you've summed it up super nicely. What I will say is that at some point, surely people have to start listening to the cybersecurity professionals, right? Like, I know we get quite a lot of different research things, different press releases coming through about how they perceive cybersecurity professionals see a gap between the what's been done and what they should be doing, and yet there's still that gap there. And so I think at some point, I think UK financial services companies just kind of need to realize that cybersecurity is a thing. Like, why are we kind of still having these conversations in 2025? I think that's what I'm trying to say. Like, it's just such an interesting thing that we're still talking about, that you need to look after your cybersecurity units. Like, you've got to face that challenge head on. And I think constant assessment of the risks that could be affecting you, I think just feels like a no-brainer to me. Like, I don't know, maybe what do I know about assessing cybersecurity risk? I'll say that to start, because I don't know anything about assessing cybersecurity risk. But surely that just feels kind of like something that, yeah, that makes sense to do. We should probably do that more, especially if you're a financial service company and you have, a lot of money, in your what's the word, in your possession or whatever. So it's just very, and I think it mentioned in the article, it's just kind of seemingly quite obvious of the things that should be done and need to be doing, and yet we're still not doing them. And I think, I think there's something to be said for the regulation. I know we were like making jokes at the start of the podcast, but it is important, and I think it is up to a lot of the regulators to make sure that the regulatory landscape is up to scratch and doing what it needs to do. I know regulation is always a bit of an iffy topic in the fintech industry. People love it. It's challenging, that they hate it, and it's quite a sticky situation. But realistically, with the state of the financial services landscape and the challenges that they face when it comes to keeping things safe, keeping their data safe, or whatever, that you've got to have regulation that's just up to scratch. Only by having kind of this robust regulation can you even hope to start doing something and making things better. At least that's what it feels like in my head. And if EU regulation is good and is what we should be following, then it doesn't matter that we had Brexit and kind of wanted to break away from that. Surely we should be looking up to and holding ourselves to the standard of other locations that are doing it well and seem to be having success with it. Surely that's the whole point of having different kind of locations, different places. Like, we need to be inspired by everyone else who seems to be doing it really well and taking what we can learn from them and apply it into our own system. I mean, again, what do I know about cybersecurity or regulation? But surely that makes sense to do. So yeah, that's kind of all I wanted to say.
Yeah, I agree with everything. You've summed that up really nicely, and just that overarching feeling of, well, why isn't everyone just taking more care of their cybersecurity? I think that's the main takeaway that we've all taken from this. But as we say, it's probably just going to have to be the regulators that step in to ensure that common sense is applied in all situations, because otherwise it clearly isn't always the case. But with that, I think we summed that up quite nicely. And why don't we move over to your article, Francis? Because I think you've got a bit of an angle related to fraud as well.
Yeah, absolutely. It's a nice segue, actually. There's definitely an element of security here and combating fraud. But yeah, as I mentioned before, the global payments orchestrator is launching the MasterCard payment passkey service across Latin America, and it will enable merchants in the region to streamline online checkout processes and enhance fraud protection. So following the launch, merchants in Brazil, Argentina, and Chile can replace increasingly vulnerable traditional authentication methods, such as one-time passwords, with the MasterCard payment passkey service. This uses device-based biometrics such as fingerprints and facial recognition already available on smartphones to authenticate purchases. The MasterCard payment passkey service also leverages tokenization technology to ensure that sensitive data is never shared with third parties and remains useless to fraudsters in the event of a data breach, making transactions even more secure. So this technology promises to not only boost the security of online transactions, but also to significantly reduce cart abandonment rates by increasing convenience for merchants' customers. So what I really wanted to discuss with you guys today is that this is clearly very impactful for those using smartphones, but in a way it almost made me think that it's inadvertently creating some limitations on itself. And that is what if biometric authentication isn't working for some reason? Somebody's dropped their phone and the fingerprint isn't working, or their camera's damaged and they can't scan their faces anymore. That sort of stuff that potentially could be a hurdle. And then if you don't necessarily have a one-time password available, what I'm trying to sort of see is, do you think the pros almost outweigh the cons? Or do you think that there is a serious sort of underlying issue that might make it difficult for consumers to continue with their checkout experiences if they're not able to approve a purchase? Because while in theory, it should provide greater security and confidence in a purchase, if there is no way to actually confirm it's you and you can't make the purchase, then I'm sure there are alternatives that are being used to the MasterCard payment passkey service. But yeah, I just wanted to get your guys' views. Do you think that a potential over-reliance on a service like this and on biometrics as a broader topic has its own limitations, or do you think that this is definitely the right sort of attitude that organizations need to take? Polly, I'll go to you first.
You've raised a really interesting question that I didn't think about when I was reading this article, kind of thinking about the sort of the cons and the limitations of something like this. And I think that's a really interesting way to view it because, when I was first reading the piece, I was like, okay, yeah, cool, sounds good. Yeah, all great. Yeah, payment passkey, love that. Biometrics, yep, fantastic. So to kind of frame it in that way is really interesting. And I think my thoughts kind of probably are a little bit flip-floppy, and I do apologize for that, but I think it's all about straddling that line, right? And it's finding that balance. As we've just said, it's important to have security measures, whether we're thinking about individual people making purchases online, or like we talk about with Tom's piece, thinking about like financial services organizations. Like, you have to be able to have that security, not only just to actually protect yourself and your data and your money, but also, like you say, so that you can have faith in what you're doing. You can trust that the payment you're making is exactly the payment that you're making. There's nothing hidden, there's nothing nasty. You have faith in the act that you're performing. So I think when it comes to sort of, services and products like payment passkeys and other similar things, I do think actually it is a big move when it comes to online transactions and making them secure for consumers. I think, anything that reduces the risk of fraud is always going to be a positive. I think maybe that's controversial to say, I'm not sure. But having a reduced risk of fraud, I think, is worth the potential friction of a transaction. I think, again, it's about finding that balance, right? Because everyone wants the fast payments, everyone wants to be able to do things really quickly and smoothly and easily and efficiently, but then at the end of the day, you also want to be secure. So I think you can't have super fast payments without having some friction in the way. You can't have a secure payment without having that friction. And though a passkey service kind of like this does provide that kind of friction, I just think you can't really it's hard to do it without it. And it's hard to imagine a solution to the fraud issue that we're having within payments without adding some kind of friction like this. So I think it's a really interesting thought. And I think at the end of the day, I guess it'll come down to like the merchant side of things, like if consumers are like abandoning carts, even though sort of the articles suggest that they see less cart abandonment because of the passkey service. So yeah, I think it's a really interesting thought. And I guess as we kind of move into the next sort of level of fintech and we're kind of looking at what's new, what's coming, finding new problems to solve, these are the questions that I guess are really important to ask. So yeah, that's my 2 cents.
No, definitely, and I agree with what you said, that it does sort of, you almost argue with yourself, don't you? You say, it's good for this reason, but then you think, oh, actually, this is where the problem is. But you think, but then this problem is outweighed by this benefit, and it's very easy to go back and forth. But what you said that I definitely do agree with is that more friction for better protection is normally the better outcome, I think, especially since the sort of friction that we're talking about is on a very sort of case by case basis. It's not going to be the vast majority of people that suffer this, or I don't necessarily want to say suffer, but come across these issues and have these challenges. And I think generally speaking, you're more likely to get a higher number of customers if you can prove that your platform is more secure and that their data is safe, which is what this partnership, or this launch, I should say, by is ultimately trying to achieve. It's trying to say, that you don't need to worry about your data being at risk if fraudsters are somehow able to get a hold of it. And I think in that regard, I think it's definitely worth it. But Tom, you agree with us, or do you think there's perhaps a bigger downside to it?
No, I completely agree with what you guys have been saying. I think there's something to be said for that balance that's really important when it comes to balancing friction and sort of the seamlessness of a transaction. And I feel like we're certainly in the UK and Europe, we're definitely at a point now where it's an expectation that payments are extremely seamless. You think about the fact that Apple Pay and Google Pay have kind of made that whole process of paying by your phone really seamless. And I think people, if they're making transactions online, kind of expect that same level of security. And even if they're not paying on their phone browser, they're on their laptop or computer or whatever the case is, they're still expecting that level of seamlessness. And I think that's obviously what this partnership is trying to do. It's trying to ensure that payments happen really quickly and without any barriers, but it's also trying to, as you say, keep people's data safe, not share it anywhere. The sort of idea of tokenization to keep all this data safe is really important. But yeah, as you said, it's just that this balancing act of, you can't have the most seamless payment ever while also having the best defenses available, because friction is one of the best defenses, because taking time to check through things, making sure that people are making the payments to the right place, it's just the more friction that exists, not necessarily is the more defense, but the more defense probably results in more friction, and more time taken to process a payment, to actually like enable the payment in the first place. So I think, as you guys said quite rightly, there's just a real balance to meet, and I feel like these kind of partnerships go a long way in trying to keep that balance and keep that seamlessness for transactions as well.
No, I think you're spot on in that. One of the biggest barriers for cyber attackers and sort of criminals is friction. They usually don't want to, or cyber criminals usually don't want to try and have to put in too much effort. They'll normally, and this is a very generalized thing to say and is not true every single time, but with hackers, if at first they don't succeed, they might try a second time, but then beyond that, they sort of say, all right, well, let me go for something that's got weaker defenses, for example. So with that in mind, the more friction you create, the more likely you are to instill that sort of attitude of giving up and thinking, well, what's the point in hackers and fraudsters? So yeah, no, definitely some good food for thought there. And with that, why don't we go over to your article, Polly?
Yeah, absolutely. In kind of a bit of a sort of 360 from what we were just talking about, I wanted to look at some news from Project Nemo. So we talked about Project Nemo last year. They're a new initiative to help promote accessibility within the financial industry. I know we talked about it last year. We featured them a couple of times, and they have come out with a new partnership, which is super exciting. So the whole thing with Project Nemo is that it is especially hard to manage your money if you're an adult with learning disabilities. And just opening a banking app can be really difficult to do when you have that kind of challenge. And so with banks pushing aggressively towards digital-only services, a lot of people are finding themselves struggling to keep up. And this is kind of where Project Nemo comes in. So the scale of this problem within the UK is absolutely huge. 1.5 million people with learning disabilities face these barriers daily, and especially with bank branches closing and digital payments becoming the norm, a lot of people are finding themselves excluded from basic financial services. So Project Nemo is coming in. They are a not-for-profit campaign, and they are joining forces with Fintech Fringe and the Payments Association on a new initiative aimed at dismantling financial barriers for adults with learning disabilities. So Fintech Fringe and the Payment Association are coming together with Project Nemo, as I said, and are really hoping to craft a more user-friendly financial services that empower those with learning disabilities to handle their finances independently. So this initiative is the first challenge in Fintech Fringe's new Innovation Challenge series, designed to connect financial institutions with innovative startups in order to develop solutions for pressing industry challenges like this one. So winners are going to be showcased at Pay 360, one of the big events in March. And basically, fintechs with customer-facing or B2B solutions can pitch their solutions to a judging panel comprising end users and financial institutions, and 5 winners will be selected to present their solutions on stage at Pay 360 in 2025. Essentially, we're just calling on fintechs here to be able to do what they do best, right? Like we always say that fintech really does well when it operates within a niche. It finds a problem, it solves the problem. And I think this is a really perfect example of that and trying to promote that. This is an issue, this is a problem. 1.5 million people are facing this problem. Let's look to fintech to try and figure out what we can do to solve it. And I think it's really great to see Project Nemo actually taking some big action in this area in partnership with Fintech Fringe and the Payments Association. So, I mean, I kind of wanted to speak to you guys on it today. Obviously, Project Nemo has been around for a while. We've talked about it before. This is the newest sort of piece of news that we've seen lately. But I guess I'd love to get your thoughts on what do you think the key is to tackling these kind of real world issues? And I know that obviously that's a massive question that I'm not expecting us to break into and solve today. But, like we said, there are problems when it comes to, different aspects of life. There are different challenges and a lot of ways fintech can solve those challenges. But what is the best way to do that? Is it, offering a program like this, where really they're really promoting people to get involved, take part, show off their solutions? Or is there another way that we can be sort of really helping to boost financial inclusion in a lot of different areas? I'd love to get just your thoughts on financial inclusion as a whole. So, I mean, Tom, I will go to you first.
I feel like the one thing that always strikes me when we're having this conversation about accessibility and inclusion is the fact that whatever studies you look into or reports, they all say the same thing, and that's that it impacts so many people that just being as accessible and inclusive as possible is profitable for these companies. So the more accessibility or the more accessible their platform or solution is, just frankly, the more money they're going to make from it, the more profit they're going to see. And that to me is why it always astounds me that companies are so slow to introduce what sometimes are quite simple solutions to make their platforms more accessible. And even when you think about the real traditional sort of incumbent banks, is you often do see like the occasional sort of implementing a sign language into a website or different sort of initiatives, but you rarely see these really big rollouts. You see one very small niche tackled at a time, and while obviously it's important that they are tackled well rather than just rolling out very surface level solutions that aren't actually going to help people in the long run, I do feel it's always a little bit frustrating when we talk about this to think, well, why hasn't more been done? We've had at least 15 years to be working on these on their websites and things, and yet we've only really seen like 1 or 2 from each bank a year. And as you said, fintechs are kind of the way to go for enabling this agility and really pushing this through. And obviously Project Nemo is a great initiative in itself to try and drive that kind of accessibility forward, and really just increase inclusion throughout the sort of whole financial industry. And it's really good to see that they are able to run these kind of initiatives. People are able to present at Pay 360 with their solutions. I think that's going to be beneficial to everyone because they benefit from added exposure plus added profit. They're also getting the benefit of rolling out these accessibility solutions. So yeah, all in all, I think this is great news. And although it is frustrating to see how slow it moves sometimes, I think this kind of initiative is exactly what the space needs to drive accessibility and inclusion in financial services.
Yeah, absolutely. I agree with everything you've said. I think you've said that so brilliantly, and you're absolutely right in that. Like, it is very frustrating that it's such a that it's very frustrating that like Project Nemo even needs to exist. Like, you're absolutely right. There's a lot of money here to tap into. There's 1.5 million people who are struggling to do anything. That's 1.5 million people who you could be, paying into your service, paying into your product. So I think you're absolutely right on that front of how frustrating it is. And just hopefully, having projects like this to really help boost innovation, delivering that change, I think are fantastic. But I mean, Francis, what do you think? What are your thoughts?
Well, first, I just want to say that it just feels like yesterday that Project Nemo was actually launched. So it's interesting to see like how far it already has come. But the idea of sort of greater inclusion, I think, and for me at least, is the purpose of fintech. When you think of financial technology, in my head, the point of it is to make life simpler for everyone. So when we sort of see these initiatives and, organizations all turning their heads to try and be more inclusive and work towards these sort of projects and ideals, it is really encouraging. But I mean, to be honest, Tom did sum it up very nicely. It is just incredibly sort of frustrating to sort of see that it has taken this long. But I quite like the idea that, at these big events like Pay 360, that's where we will see the best ideas shared, because I think there's going to be so many people in attendance and organizations in attendance at an event like Pay 360. And I think it will be interesting to sort of see how impactful the selected companies' ideas, the impact that I should say that they have on those in attendance, where people think, actually, that's a good idea, we should do something similar like that. And although it's not necessarily networking, I think it's about getting this different cultural attitude accepted and sort of promoted within the industry. And I think that will sort of just in time have a sort of a ripple effect. And I know that we're just at the start of 2025, but sort of when you talk about it like this, I think it will be interesting to see, how far it can get in the years to come. But saying all of that, there is obviously the caveat of, I feel like we say this every year, that, we're making these great strides. And while it's true, there is just still so much to work to be done. And I think that is the ultimate sort of thing that underpins everything, is that, yes, it's good, but there's still so many people that are excluded from the financial ecosystem that we know today. And the only way that will change is if, things like Project Nemo and the cultural attitudes, like I mentioned, like these things can change. So unfortunately, it is just going to be a time thing, but I am optimistic that the more we see organizations discussing their changing attitudes, the better it will be.
Yeah, definitely. I think you said some really important stuff there, Francis. And I think you're absolutely right. There's a lot to be done. But I guess the thing I quite like to remember as a very positive kind of take on it is that slow change is still change, slow progress is still progress. And while it's, we all wish we didn't have to make that progress, because we all wish there wasn't progress to be made, that we're all, everything was as we would like it to be, or that it was going faster. At least it is going in the right direction, which is kind of a small victory that we can claim. But anyway, guys, thank you so much for bringing your articles today and joining in on the discussion. If you want to hear anything more about what we've spoken about today, head on over to thefintechtimes.com and you can read plenty more news and insights over there. But very quickly, we will do what I learned this week. So each week, so much new news and information about the fintech world crosses our desks, and we thought it'd be fun to share what we learn with our listeners. So Tom, what have you learned this week?
So this week, I learned that in 2024, 23% of payments across a wide range of sectors, including retail, construction, and professional services, were made outside of regular business hours, with payments links proven extremely popular amongst out-of-hours customers.
Fantastic. And Francis, what have you learned this week?
Well, with this week being the first official week of our February monthly theme of artificial intelligence and AI, we looked at how important the human touch was in customer service in a world where AI is being increasingly used. And I just wanted to share one of the views that empathy and critical thinking are, it potentially something that we already knew, but I think it's important to sort of just drive that point home. And that's empathy and critical thinking are just absolutely crucial in a world where customers want something or want a personalized service. And yeah, AI just can't do that.
Awesome stuff. And then what I learned this week is that Telcoin Bank is a step closer to becoming the first regulated crypto bank in the US after receiving conditional approval from Nebraska's Department of Banking and Finance. So very exciting stuff. Anyway, guys, thank you so much for joining me this week. As always, it has been an absolute pleasure to talk about fintech with you, and I will see you on the next one.
See you guys next week.
See you then.
Thanks for listening to the Fintech Times News and Views podcast. Don't miss next week's episode and continue the conversation using #TFT News and Views and follow us at the Fintech Times.